Hello and welcome to traders and investors, and I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Let's draw pivot points for majors: EUR-USD and pound sterling dollar pair. Evangelos Poulakis would help us. The bears of EUR-USD are trying to extend the downward movement. Since they encountered a wide support area, they started testing it. In order to strengthen the bearish bias under current conditions, sellers need to overcome 1.0817, 1.0808, 0795, and 1.0785, and go beyond the daily and weekly Ichimoku clouds, consolidating in the bearish zone relative to the clouds. The weekly medium-term trend that was left behind, 1.0871, currently serves as resistance and the nearest target in case the bulls recover their positions. On the lower timeframes, the weekly long-term trend managed to accomplish its task yesterday, so the bears still have the advantage. The bearish bias can be improved further through testing and overcoming supports of classic pivot levels 1.0793, 0770, and 0736. Today's key levels can be found at 1.0827, central pivot level of the day, and weekly long-term trend at 1.0850. A breakout and consolidation above these marks will affect the current balance of power, so the bulls can still gain the uptrend. In this case, the next bullish targets will be 1.0884 and 1.0907, resistance of classic pivot levels. Yesterday, the bulls of GBPUSD were unable to surpass the previous day's high, forming a candle with a bearish sentiment. Today, we can confirm this sentiment on the weekly candle. If the price continues to fall, the nearest supports are at 1.2665 and 2634. Sustaining a bearish bias on the weekly timeframe could mean that this trend will persist on the monthly timeframe as well. On the lower timeframes, the bears have now moved below and consolidated on the key levels. As a result, the bears have the advantage. To build on the bearish sentiment, a decline must be realized by testing and breaking through the supports of classic pivot levels, which are located at 1.2670, 2647, and 2609. It is very easy to lose the current advantage since the market hasn't moved far from their key levels. Rising and consolidating above the key levels of 1.2708 and 2706, central pivot point of the day and weekly long-term trend, will push the balance of power back to the bull side, and it's possible to strengthening positions by breaching the resistance of the classic pivot levels 1.2731, 1.2769, and 1.2792. And finally, here is Laurie Bailey. with AUD-USD currency pair forecast. Let's have a look. On Thursday, along with the decline in stock indices, prices for key Australian export commodities, including copper and iron ore, also fell. As a result, the AUD-USD pair's initial attempt to start a rally failed, and the quote closed the day down by 11 pips. On the daily chart, it is clear that the upper shadow of the candlestick tested the intermediate level of 0.6651. But the day ultimately closed fully below the target level of 0.6627. The signal line of the Marlin oscillator is trying to push into the area of the downtrend. The Marlin will likely succeed, and the price will get an incentive to test the nearest support at 0.6552, the MACD line. On the 4-hour chart, the price has also consolidated below the support area of 0.6627, which has now become resistance. The MACD line and the balance line have turned downwards, indicating that the short and medium-term trends have shifted to a decline. The Marlin oscillator continues to move deeper in the downtrend territory. We expect the price to reach the first target of 0.6552. Consolidation below this level will open the path to the second target of 0.6480, a strong support level since the beginning of the year. That's all for today. See you online soon.